All right, guys, about that time of day again. Back to work, back to work. Hope you guys had a fantastic Tuesday, but it's back to work tonight. Getting ready for Wednesday's trading session. Got a bunch of ranges on my charts tonight. Got a bunch of great trades setting up for Wednesday's session. I'm going to cover all my favorite trades in tonight's video that will give you a game plan to make some money tomorrow. Before we jump in and get this party going, got a lot we're going to cover in tonight's video. Make sure you subscribe to our YouTube channel, though. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoy this video, hit that like button for me. I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready to make some money on Wednesday. Where are the best trades setting up for Wednesday? Well, boy, lots of ranges on the charts here tonight. Got a range in the Nasdaq, range on the S&P, and a nice juicy range on the crude oil. You know me, I love ranges. I wish every day was a range-bound market because we're trading breakouts. We're trading, more importantly, fake-out breakouts. I think the fake-out breakouts could be the best money-making trades for us tomorrow morning in our trade room. So lots of ranges, breakouts, failed breakouts, fake-out breakouts. We're going to cover all that stuff here tonight on this video, getting ready for Wednesday's trading session. Now, speaking of Wednesday, we do have a little bit of news tomorrow. There's not a lot on the schedule for tomorrow. We get the durable goods orders at 8:30 Eastern time, and then, of course, later on in the morning, the weekly inventory report for crude oil. Now, those are the big news events for tomorrow. The goal for oil will be to make your money early tomorrow before about 10:15 or 10:20. Things usually get a bit messy after 10:30. So the goal will be get there early, make your money early on oil. We'll talk more about this here in a moment so far as the game plan on oil here. Durable goods, of course, at 8:30 is probably the biggest news of the day. We'll see how much this actually impacts these markets right now. Really, the markets are really all about kind of unscheduled news right now. You know, we heard rumor today. We're going to hear from Joe Biden tomorrow about student loan forgiveness. We keep hearing from OPEC talking about, weaning off the production or cutting production. We've heard a lot about slowdown in China, and we saw that shocking PMI number come out of the UK. So a lot of news that's coming into the radar early in the day. So we're going to keep an eye on that, and that may be some of the biggest catalysts for tomorrow. So we'll have our news feed running tomorrow morning in our trade room. What we know right now is we know we got the durable goods orders, and we know we have the weekly inventory report tomorrow, 8:30 and 10:30. Those are the known catalysts. And again, we'll be tuning in tomorrow. Will we hear more from OPEC? Will we hear more out of the slowdown coming out of Asia into Europe? Will we hear that important announcement tomorrow from the U.S. President Joe Biden? Those are things we're watching here as well. Back to our charts, though, guys. Whether you trade one of these markets or you trade all of these markets, make sure you watch all the way to the end of this video tonight because I'm going to cover different trade ideas, different advanced tactics. You're going to learn something new throughout the entire lesson. And I try to wrap things together with all the best stuff towards the end. So I'll give you a reason to watch all the way to the end here tonight. Nasdaq's up first. We'll go Nasdaq, S&P, and crude oil. Let's jump into that Nasdaq. A 4,000 tick chart here tonight on the NQ. Could be the Nasdaq, could be the micro Nasdaq, could be the QQQs. This analysis will help you make money on any of the variations of the many Nasdaq products that are out there. There are a couple key insights that tell us where the best money-making trades are right now on the Nasdaq for tomorrow. The first key insight is the overall bear bias. We had that big move down yesterday, which was the second day in a row of some big moves lower. We actually closed lower here today, so technically we are 3 days in a row in the red. We're definitely bearish overall. That does not mean that we can't find some nice short squeezes for tomorrow because I definitely have some buy setups on my radar here. We'll talk about that in a moment. But right now we have to think, right? The bears have the overall bias. The easier money will probably be on the short side. Second, and one of the most important clues here for tomorrow is this trading range. And you'll notice we have what I call rotation off the high. high, right? So we pop up above that trading range. Ranges love to rotate back and forth. And so we pop up, and now we're kind of rolling back down. And we have to think the bears right now would love to take out the pendulum swing, right? The amount we go above the range, the amount we go below the range. We have to think the bears would love to take out that pendulum swing. Got to think the bears would love to take out that low, right? That was that surprise PMI number that came out of the UK today, right? The UK's PMI came out in contraction. We had our PMI at what, 945 this morning, which came out above 50. But that UK PMI is what came out earlier and kind of shocked things as far as that slowdown that's starting to make its way from Asia into Europe, and we assume, of course, coming soon here to the US. So we know we have a bear bias, and we've got this market kind of rolling over here, trying to take out some of these key levels here for us. So the bears have all the control, right? The bears, they would love, of course, to sell some breakouts going lower. Bears would also love to sell some resistance levels up overhead, right? So sellers have a couple different options. Now, buyers have some great options too. The buyers can buy into here, right? Some short squeezes, some traps below that low, right? That'd be a good place to be a buyer. I really like the idea of buying down around here, that 12,744, that 12, this whole area here, kind of call that the bounce area, if you will. I think there probably will be some good opportunities tomorrow for some shorts going lower, and then potentially some longs going right back up into that trading range. Because if we do go lower, I mean, that'll be what, 3.5, almost 4 days of moving lower. And although I'm all in on the bear side right now, but it's tough to keep a market going lower forever, right? So I really like that side for the buyers. So how do we make some money on this, right? How do we put all these pieces together here for us? Well, let's talk about this first. As the market goes lower, right? As the market goes lower, ranges act like magnets, right? So ranges act like magnets. The magnet, right, of course, up overhead. Can we take out the pendulum swing? Can we take out that low? And then could we possibly trap in some of the weekend bears? This is a horrible place to be selling down here, right? You understand, right? The range above us at support. This is a horrible spot to be selling. Maybe we get lucky tomorrow. We can catch some bears coming in, right? Looking for shorts here. And once I see those bears come in and try to get short on this, think about where their stops are, right? Think about where those bears have to exit for a loss. The only way to get out if you're stuck short into those lows is to buy your way out. And this is where a 2-try failure could really come in handy. That nice, strong, what could easily be a short squeeze going back higher. Now, as you guys always hear me talk about, once we get those squeezes, once we trap in those bears with a failure pattern, we can then go over, draw a trend line off the high, mark a channel with that trend line, and then, as we always say, look for that first test trap off the low of that channel. Now, of course, I say traps, right? But this could be a trap. It could be a failure. It could be a pullback combination, right? All the stuff that we talk about in our free trading course here at schooloftrade.com. So I like that buy setup. I like that 2-try failure. Remember, at this point, they've retested that low. The range is above us. We got to be careful because, again, it is a bear bias, but if we let the bears kind of wrap that noose around their neck and then use their stops as a catalyst, we can probably get this thing to rip right back up into the range and probably try to take out that high at 0.18.5 on the way back higher. And then we'll talk about how to sell this thing here in a moment. Now, as we're going lower, can I sell it? I mean, after all, right? It's a bear market, isn't it? It is a bear market. So what you want to think about here is there are probably going to be 2 different ways to sell this thing as it goes lower. Are you ready? One would be, let's take out that low, same thing, right? But now, instead of the bears coming in and struggling and squeezing, right, going higher, now the bears come in and they jump off that moving average, okay? If we get a 1, 2, 3 breakout, at this point now, we have a pretty good idea of where the market wants to go. My job will be find a trend line off that low, mark a channel off of that high, and then, as I mentioned before, right, look for that first test off the high of that channel. Now, of course, this could be a trap like I have it drawn right here. It could be a failure where we go back above the moving average, right? Buyers come in, they try to buy off the EMA, right? They fail, and the price tumbles lower. So it could be a trap, it could be a failure, it could be a pullback, it could be any of those price action setups that I talk about in my free trading course. Which reminds me, I know that most of you guys have already taken that free class. You've learned all the setups. You know kind of how to draw the channels, where to take the trades, where to skip them. But listen, if you're here for the first time, if you're one of the few folks who haven't taken that free class to learn all the entry tactics we use in our trade room, I'll put a link up here for you in the upper right hand corner. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you're trying to transition into full-time trading, the strategy that I teach in that free trading class link that popped up will help you get into many, many more winners, help you avoid costly losses, and most importantly, the roadmap I teach in that strategy will give you a ton of confidence. Like I said, it's great for someone who wants to make a full-time career out of day trading there. So grab that link that pops up. You're going to love that free course, and let me know what you think too, right? Would you give me some feedback, because I'm always so inspired by how you guys are making money with that stuff here without even joining my trade room yet. So grab that link up there. You're going to love it. So that's one of them. 1, 2, 3, right? So we take out that low. The bears come in. They hold that pullback. We find that channel, right? And we sell off that, right off that channel. Now, here's a good rule of thumb. The size of that leg, first leg, is oftentimes the size of that leg. Okay, so that's going to give us an idea of kind of where exactly that target will be after that short off the high of that. All right, now there's one more sell setup I want you to be keeping an eye on, and then we'll talk about the buy side, right? Because again, like I said earlier, I think that's where some of the best money could be earned here for tomorrow. Here's a second one. Let's say now we take out the lows again, right? Always the same thing. Take the lows out. Now, at this point, though, we don't pull back and jump, right? We don't pull back and jump. We pull back, but we begin to grind and grind and grind. These are easy, okay? These are easy. Mark off that trend line off that low. Find that channel off the high. I'll go up top here, right? Find some bigger channels. And then next step is mark some prior swings. Okay, one of my favorite trades right now is this pop and grind, right? Where it pops and grinds. It sounds like a dance move, you know what I'm saying, right? The pop and grind, right? Anyways, all kidding aside, they pop down, they grind lower. It's like a 90s dance move, right? Will Smith was doing it back in the 90s. Anyways, so now I get above that prior swing. We get that, right? We get that trap, that failure, that pullback combo, first leg, third leg from there, right? So think about that pop and grind channel, and then grabbing that trap, that failure, and then down from there, okay? Those are two ways to sell it. Now, let's say, for example, we get that strong run down, right? We get that short, and now we retest that low, right? We go 1, 2, 3, we find our channel, we grab that short, right? We retest that low, and now we take our profit, right? Take our profit. We're selling off top of that channel, whichever type we get. We take our profit now, and now at this point now, all the weak hands come in, right? Now all the rookies who didn't have the confidence sell back here, now they come in and now they start selling down here. At this point now, this is where we expect the professionals who sold on the way down, they're taking their profit, and these are the weak hands. Let those bears come in and let them try a couple times, right? Let them try just enough to give you an idea for where their stops are, and that's exactly where we get those big squeezes. I really like that opportunity. So pop, grind going lower. We find that channel. We grab that trap. We retest that low, right? Take our profit, move stops down, right? And then we start to see now the bears come in and they begin to struggle. 1, 2, where are their stops? We look to buy now into those stops because, again, it's a bear overall market. Yes, the range is a magnet, but momentum is way too bearish just to buy it. We need some sort of catalyst, and the best catalyst you're going to ever see is a stop run or a short squeeze in this situation. So we find that two-try failure, we buy into those stops. You'll see a lot of examples of two-try failures, by the way, inside that free course I mentioned, linked up in the upper right-hand corner. And then as we go higher, this is where the fun starts, mark off that high, mark off that low, find those prior swings. And again, I love traps. I love any good setup I get off the low of that channel, right? So I really like this sequence. This could be a really good sequence for us tomorrow. That strong move down, that short off the high of that channel, and then rope in the weak hand sellers at that bounce area, and then whoop, right back up into that trading range. I would imagine this could really be a good short squeeze, right? Take out some of these highs up here and possibly run all the way back to that 13,018. So that's a pretty good game plan. I like that game plan as we go lower, whether it be buying the failure off the low, selling the breakdown, and then buying it right back up as we go from there. Now, the next question we have to ask is what if we go higher? We're overall bearish. Can I sell up there? I definitely can. Can I buy up there? Absolutely we can. Why don't we talk about the best way to buy it and the best way to sell it? Let's go to the S&P. Now, keep in mind, obviously, right, pretty much everything we've talked about on the Nasdaq tonight can also be translated over to the S&P. I should have mentioned that earlier, right? The S&P and the Nasdaq are very, very similar. So everything we've talked about as we go lower here on the S&P can pretty much apply right to the Nasdaq and vice versa. Okay, there are two main insights or two key components, whatever you want to call it here on the S&P. They're the exact same thing as we had on the Nasdaq. We are overall bearish, right? Long term, medium term, we're bearish right now. And there's a range, right? The range itself has the market popped up and we're rotating down off the high. So again, very, very similar here. As we go lower, take out those lows, complete the pendulum swing, right? Pendulum swing, take out that low. Basically, guys, we have to get to some support area below the trading range. We know the range is a magnet. As we go lower, bears once, bears twice, buy back up. Got that. As we go lower, do we hold that breakout and jump? Right? Do we get that 1-2 jump, strong move off that, right? Off that moving average. Mark off that low, mark off that high, and we're selling that first test, right? First leg, third leg. Where's the bounce zone on the S&P? It's down here, right? It's down around that 40.92, 40.90, 40.85, right? So don't be surprised if it takes that low out. If we see that strong pop lower and we're grabbing that first pullback from there, right? That'd be a good one. Then again, we retest the low, we rope in the weak hand sellers, 1, 2, and we are bam, right? Buying it right back up. And ideally, getting this thing to turn over and then grabbing that new channel and then grabbing the long off the low of that channel. Love, love, love that sequence there, and really could be one of the best trades of the week tomorrow. So we covered that. I hate to repeat myself, but I want to make sure we're all on the same page on that in case you're trading the S&P instead of the Nasdaq tomorrow. Next question, very important question. What if we go higher here? Well, first of all, if we go higher right now, that will be seen as a major failure here for the bears. Right? The bears at this point have one thing on their mind. They want to bury those lows. They want to bury those 41, 18 lows, right? If the market runs higher now, that has to be seen as a major, major failure there for the bears. What does that tell me? It tells me, most likely it tells me that, remember that big move down we saw yesterday? Remember how I said yesterday that we don't be surprised if we see a really, really deep pullback? We never got that deep pullback today, right? We get a pretty good pullback, off the top of that channel, which we talked about last night. So we got the pullback we liked, but we didn't really get the pullback I think everybody was really wanting, right? That really deep pullback. If we fail, right? If we fail off that low, I would imagine this is where we have, for the most part, very similar to the idea of if the price goes lower. So if price goes higher, I'll bet we're going to get a chance to be a buyer on this thing as it goes higher and then dump it back down as we go lower, right? So kind of getting one of those breakouts and then back into that trading range, just like we talked about here a moment ago. So let's think about this now. So as we go higher here, right, we know where the market wants to go, right? It's going to want to take out this high. Absolutely 110%. That's where buyers are going to want to go. At this point now, even though we have an overall bear bias, this is still going to be a very bullish short-term momentum push. And because of that, this is where those two try failures are really critical. Let the buyers try once, let the buyers try twice here. I'm not buying this at all, right? Because you can see every time we've gone a little bit above a prior high, more bears are waiting. So there's no way I feel comfortable buying into that high. That's a fool's trade in my eyes. It might work, believe me, right? There's not a good chance, but there is always a chance that will work. I don't want to take those lower probability trades though, right? Remember, there's a very significant difference between a 40-60 trade and a 60-40 trade. Okay, a 40-60 trade will make you go broke over the long run. That is a 40-60 buy right there. It's probably a 30-70 buy. Now that might be your style, right? You might like the thrill of having kind of kind of a risky trade because it will pay off. But not everybody is suitable for those types of trades, right? It's tough to keep trading when 2.5 out of 10 trades win for you. Some people can do that. Most people that I've worked with, we want to get those winning ratios 85, 90% because you're going to get those levels of confidence up. When you're confident, everything just runs so much smoother. You know what I mean? Let me know what you think. I'd love to know what you think on that. Do you think it's realistic to trade a 70-30 trade or a 30-70 trade, right? Would you keep on executing that game plan even if you went loss? Would you still have the confidence to do it again? Because that's the way you have to trade when you trade a 30-70 or a 40-60. You have to be willing to take that next trade after going loss, right? That's the hard part about it. Psychologically, it doesn't work. Anyways, I'm on my soapbox now. Rant is over. As we go higher here, right? Buyers come in. I would love to get these buyers now try once, right? Get them try twice. Now, one of my favorite shorts on these types of situations is to draw a trend line off that low, bring it up around that high, and then look for it almost like a channel. You know what I mean? Now, these are sometimes a lot steeper. We saw one today where it went up, right? Buyers once, buyers twice, draw the trend line off that low, off that high, right? And you're selling it back down again. So a lot of times these will be steeper, right? But again, you want to see those buyers try twice here because again, it is going to be seen as a major failure for the bears at that point. So once those buyers now try twice here, now we can go out and draw, right? And draw that new channel and then find that dump, right? Going back down into that trading range. We pop up. Right? Bears, the big lot bears, right? The big deep pocket sellers, the $1 million trade accounts, right? The 7-figure trade accounts that are selling into these big moves here, right? Those aren't us, right? We're looking to time our entries better with buyers once, buyers twice, find that channel off that high, right? And then grab that short from there. Once we get that short going down, then we can go out, grab that low. Most of the time, what will happen is it will do something like this. Well, you'll grab that low, find that high, and then this is one of my favorite trades right there. Love that trade. Sometimes we don't get a good failure off the high. Sometimes we don't get that proper entry to short off the high. Sometimes all we get is as it rolls over, we find that new channel. And if there's one trade, I'm always telling my students this, if there's one trade you really can't afford to miss, it's that re-entry right there, because at that point, momentum has shifted, the buyers are beat, and the range below you is a magnet, right? I really like that trade short here. Again, we'll look for the buyer failure and sell that buyer failure. But, let's say, for example, right, it goes up and comes crashing back down, right? We'll just grab that first entry as it comes across, as it rolls over and goes back down again. I like that option as well. So keep that on your radar. Now, what if we went up? What if the buyers came in, held that pullback, and jumped? Right? See, this is exactly that same dance that we just talked about, right? So, okay, they take off to the upside. They pull back to the moving average. They jump off the moving average. Okay, bull market for now, right? Bull market for now. We mark off that high. We mark off that low. We drill down, find our traps. This is an 8,000 tick chart, right? We're not trading 8,000 tick chart in the trading tomorrow. We drill down, we find our traps, right? We get below the moving average. We trap in bears, right? Speaking of traps, the bears come in, they try to get short, and we're going to use those stops as some sweet, sweet juice on that trade going higher, right? Strong run up, first leg, third leg, right? First leg, third leg, first leg, third leg. Now, what is likely to happen on a situation like this is we're likely to go back up and retest that high. Remember, anytime we see a strong move in one direction, the odds are very good we're going to see it pull back and at least double top, right? At least retest the high. If we're lucky on this for the buyers, right, we'll get first leg, third leg, and that will be our measured objective, our measured target going higher here. Let's say, though, we get the trap, we get the seller failure, and then we double top. Right? What do we always say? Mission accomplished. Mission accomplished. The buyers bought low. They take their profit at the high. And this is where, remember I said last night, I said right when it feels like the market is bullish, that's when you've got to be thinking for the short, right? That's what happened today, right? As soon as this thing broke out, we're like, oh, shoot, maybe this is going to, no, hold on. Let's sell this thing back down into that range. This is the same idea. This is where, when I was a rookie, I would get caught on this all the time where the market would pop up, it would retest, and we'd go, oh, man, we're bullish right now, right? To come in and buy now going higher. You're in too late, right? You're in too late. If you want to buy this, you got to buy down here, right? We make our money buying low, not buying high, not buying at resistance overhead, and it's exactly where we can do that to try failure, dump it back down in, and then grab that channel and hit it as we go lower. I really like that trade. How about this one too, right? How about a pop and grind? A pop and grind would be just as good. We pop up, okay? We pop up, and now for whatever reason, right, the bears walk away, and we begin to grind and grind and grind and grind, right? Easy. Mark that high, mark that bigger low, trap, find those prior swings, right? Get under prior swings, ideally, get under the moving average, get those failures, right? And we're going, hopefully, right, back up to retest the high, or potentially first leg, third leg, right? That'll give you some good evidence there, some good targets up top, right, as we go higher. We double top, we retest the high. Okay, then in come the weak hands. The buyers come in now. They're buying high once. They're buying high twice. Remember, lower lows, guys. Lower lows. Buyers want to buy low. Lower lows as they buy into it. That will recruit more buyers. It means there's bigger stops waiting right there. Right? Once those buyers come in, they try once, they try twice. You know exactly where their pain is, right? You know exactly where their pain is. The easiest money you're going to make in day trading is when you're selling into the buyer's stop loss because they got nowhere to run. At that point now, as those stops get triggered with that juicy signal, now we drop it over. Again, if we can't get the short off the high, there's one trade we don't want to miss. That is find that new channel, mark those prior swings, and we'll take pretty much any decent setup off that, right off the high of that channel. All right. Again, this sequence is the exact same sequence I described on the Nasdaq going lower. It just flipped. That's really all it is. Right. I will definitely say the move going higher here, it's going to be very important that we get into that pullback as quickly as we can, because the higher it goes up, right, the more likely it is to double top and then begin to roll back over as we go. And hey, if something crazy happens overnight and the market, right, and the market was to pop and go and keep on going, right? Again, doesn't seem likely right now. Does not seem very likely. But hey, who knows, right? The world we live in right now, anything is possible. If this market was to really reverse and start to rip and run higher, 4,200, big round number, gap fill, you know buyers, right? You know buyers have a fantasy about filling that gap fill at 42.25 tomorrow. Probably not going to happen. But, again, if we were to break out, hold that pullback, And then from there, the buyers just blast this sucker. You know what I mean? Hey, short squeeze could easily happen. And if it does happen, by the way, if we do see that, again, we'll buy that low. But if it doesn't pop up and 1, 2 and drop back down again, if it was to jump, right, what would be a good trade to get in on that jump? It would be a 2-try trap. Because at that point now, it'll probably really start to pick up momentum there as it goes. What's a 2-try trap? A 2-try trap is nothing more than a strong move, a shallow pullback, and a higher high in price. That's all that is. So if we happen to get a small miracle, right? If there's a miracle for these buyers, right? If tomorrow is a bullish miracle for the bulls, right? Think about it again. We're buying that first pullback, as I mentioned a couple times already. But if this thing just rips and runs and squeezes out all those bears here, again, there'll probably be some sort of news headline that goes into that as well. That trap right there, that's the money entry, right? That's that 2-try trap as we go. That same thing would apply down here too. Right? So if we do end up going lower and this thing really does 1, 2, 3 and then just rips, right, and blasts going lower, those are the situations where you look for those strong moves, those shallow pullbacks, those lower in price, and that trap. Right? Traps, baby. That's what we always say, right? For those 2-try traps. Again, this would be if we just rip right through these lows down here and start making our way down to that 4,000 area. All right? So we'll keep an eye on that, right? So I think we have a pretty good game plan here on the S&P and the Nasdaq. What do you think, though? What do you think? I would love to know. Am I crazy with this analysis? What do you think? Let me know in the comment section. And while you're down there, hit that like button for me if you guys are enjoying this video right now. Let's wrap things up here on the oil, shall we? The black gold, the Texas tea. Well, as we anticipated last night, OPEC's shenanigans, pumping price up here once again on the oil. OPEC yesterday, by the way, if you missed yesterday's newsletter, OPEC was talking about cutting production in anticipation that Iran, their facilities are coming back online here very soon. They mentioned that they thought that the actual physical, commodity and the markets were a little bit out of whack, and they were thinking about cutting back on production. We picked up on that. You can see, of course, markets are very bullish right now on the oil. We'll see how long this lasts. The world is kind of in the middle of a slowdown right now, so it's tough to imagine oil being that bullish in an economic slowdown. But, hey, one thing we know about oil is very much news-driven. Oil is very much nothing to do with reality. It's all about perception of supply and demand. So if you're trying to pair the oil price with reality right now, you're in the wrong business. There is no space for reality in the oil markets these days, or really many other markets, if I might add. There are 3 key insights, though, to trading oil tomorrow. One, of course, is a bull bias. Last night, we had a mixed bias last night. Well, that sure changed when we saw a strong run higher today. What does a bull bias tell us? It tells us that we can make money being a seller, but it's going to be a lot easier money. The lower hanging fruit is probably going to be on the buy side right now. The next big clue is a big move higher. Now, you'll notice here, if I go back over the last couple of days, what's the one thing we don't see over the last day and a half? What's the one thing we don't see? A pullback, right? There's been almost no deep pullback. Anytime we see a big move in one direction, we expect to see a relatively deep pullback. Why? To attract buyers in at a better price. The same reason why you and I don't want to buy at a high price is the same reason why buyers won't want to buy at a higher price right now. Anytime we see a strong move in one direction, we expect a pullback and a retest of that high, right? Anytime we see a big move in one direction, we know the odds are pretty good. We get a lot of buyers who are looking for bargains, right? Looking to bargain hunt this thing as we go. And then, of course, the third clue kind of piggybacks on that same idea. It's a very narrow trading range. Okay, now this is a page out of one of my video classes within our membership class here at School of Trade. When it comes to ranges, what you got to understand is that ranges, of course, are magnets. And so with a bull bias right now, I'd like to be buying off support, right, going back up into that trading range. What's important to understand, though, is that when you have a narrow trading range, we need to get a bigger breakout to get a good risk-reward ratio. So, for example, right, if I have a really wide range, If I have a really wide range, I can pretty much trade the edges. You know what I mean? I don't need to get a very big breakout in a wide range because I can risk small to earn large right around the edges of a trading range. Okay? So think about a wide range. I don't need a very big breakout because risk reward is still in my favor. But if I flip it now and make it a real narrow range, and you can probably kind of see where I'm going with this, right? If I try trading that same edge around a narrow range, there's no reward, right? The risk reward is horrible. So the narrower the range is, the bigger the breakout needs to be in order for us to what? In order for us to make it worth our risk involved, right? In order for us to get a good risk reward ratio. Okay, does that make sense? Right? If that makes sense, give me a hashtag hell yeah in the comment section. I would love to know who my serious people are that are still watching this video right now, 35 minutes into this video. If you're watching this video right now, you are the person I do these lessons for, right? Not all the TikTokers out there that can barely have a 90-second attention span to make these videos shorter here, right? Anyways, off my soapbox again. So we have those three components. We know we're bullish. We're looking for a relatively deep pullback. Why? Because that big move up and because of that small trading range, right? Makes sense? Make pretty good sense? Okay, so buyers want to buy pullbacks, ideally the deeper pullback. Buyers would also love to trade breakouts. Okay, trading breakouts. There are three different types of breakouts we can look for on this. And what about the sellers? The sellers have to be careful right now. The bears would love to get a double top reversal. That would probably be the best trade for tomorrow for the sell side, right? Buyers buy it up. We see the bears coming in. And they'll sell off the high there. We've talked about that a couple times already. Or let's say, for example, something happens overnight. Oil is very much news driven, and we get a reversal going back down to probably 90, 89, 62 is the prior week close. Let's talk about these. Let's talk about all those different options here for tomorrow. Most important thing is a shallow pullback. We need to get a trap. Okay, shallow pullback, traps are your money trade for tomorrow. Why? Because we're still buying high at that point. Technically, we're buying a little bit too high to get a really good risk-reward ratio on it, and we want to use a trap entry to offset buying high. Traps are great to buy as low as you possibly can. So watch those traps on a shallow pullback. The real money, though, is get me down around this 91.5 area, 91.70 area, right? Get me that nice deep pullback. Now, deep pullbacks are great for risk reward, but what's the problem? They give momentum a little boost for the bears. And so these are where you look for those 1, 2, trap in those bears here, use their stop losses, use their pain as the juice, right, as the gasoline. And then once we get that signal, and again, you'll learn more about signals in that free trading course I keep touting in the upper right-hand corner there. As we go higher, this is that same song and dance we mentioned before. Find that new channel, right, and then grab that first test off of that low, whichever one of the entry patterns we get, which you guys are learning in that free trading course, right? So this is what I would love to get tomorrow. This will be my favorite possible scenario here for tomorrow. Now, let's say now we run lower, but the bears, for whatever reason, they come roaring back into this thing. I don't know, right? Maybe OPEC says, nope, we were wrong. We're gonna increase production. Sorry for the miscommunication. We're learning this stuff to right. Whatever. It pulls back, doesn't fail and go higher. It pulls back and it blasts. Right. It jumps off that moving average. 1, 2, 3 reversal. Remember, we are not selling that first pullback. Right. That is a 30-70 trade right there. All right. Yes, 30 out of 100 will work, but you're going to go broke before you can make any money off that. Again, very difficult to trade those types of strategies. They will work for a computer, right? But computer is one of emotion. Anyways, 1, 2, 3, moving lower. Mark that low, mark that high. We drill down and we find that short off the high, right? First leg. Third leg will help us really nail down where those targets are. If this market reverses, though, I would imagine 90, 89.62 is where you would think this thing wants to go here. Or maybe it pops lower and it begins to grind, right? Pop and grind and grind and grind. Same basic idea, right? Pop and grind, mark that low, mark that high. Now, this could easily be one of these situations where we get that trap, right? Get that short off the high. They double bottom off that low. You know that could possibly, that could happen tomorrow, right? Get that short off that pop and grind and then trap in 1, 2, that same dance we've been talking about here so far, right? That would be a way to make some money this tomorrow, right? So keep an eye on that as well. As we go higher here. Oh, one more thing. Almost forgot, right? We get that pullback. We rope in those bears. We run this thing back up for an easy target back at that high. Now, rope in the weak hands again. 1 try bulls. 2 try bulls. Lower lows, right? Lower lows. Buyers want to buy low. Higher highs. Sellers want to sell high. That's the way these 2 try rule failures work. And you'll learn more about that in the trade room tomorrow morning. 1 try, 2 try, stops are right there. We're selling off those stops off that high. Where does the market want to go? It wants to take out that low right there. So grab that short off the top of that channel. And you can probably see by now, right? We're going to keep doing this, rinse and repeat over and over again, because this is how the markets work, right? We buy the dips, we take our profit at the high, we rope in the weak hands, use those stops as a catalyst, and then make that run back down once we get back to those lows. 1, 2, and do it again, right? Keep on rotating back and forth in that range until we break out. Speaking of breakouts, 3 different types of breakouts. First one is that strong pop, that shallow pullback, that higher high in price, and that trap, right? We call these 2 try traps, or in this case, a 2 try breakout. Where's the market want to go at that point? Well, believe it or not, $100 a barrel is, I mean, look at that. Wide open space up there. Wide open space up there. We'll have to find some more targets once we get out there tomorrow morning. Next one would be pop up, hold that pullback off the moving average, jump off the EMA. 1, 2, 3, breakout going higher. Mark that high, mark that low. Find those prior swings and don't miss that first test, whichever of the entry patterns that we get. Right? First leg, third leg, that'll give you that good fine tune for the exit. Or a pop and a grind, or pop and grind, right? My favorite dance move these days. We're going to mark off that low, grab that trap, grab that failure, right? That will be probably the easiest trade to take there for tomorrow for the bulls, because those pop and grinds, they're so easy, right? They're so easy. We saw one here before, right? We pop up, we grind up. Whatever could we do? Oh, let's draw a trend line off that high. Let's bring it off that low. Let's mark those swings. Who could have ever seen that type of setup coming? Again, you'll see these over and over and over again, especially when markets are squeezed or there's some sort of news catalyst, or you're in the thick of the dog days of summer when the volumes are a little bit lower as well. All right, guys, that is it for me here tonight. We got a good game plan here for tomorrow. Now, don't forget, speaking of tomorrow, we're back in the trade room tomorrow morning, 8 o'clock Eastern time. I want to see you there trading right along with me. If you're missing too many good trades each day, or you're taking too many losses, if you're serious about making this a full-time career, come out and join the trade room. It's a great place to learn and trade along. Start with the free course first. Learn the basics. I'll put all the important links you need. The free course links are there. The membership course links are there. Start with a free course. Get your feet wet on that. Get that going, and I'll be ready for you when you're ready to go in the trade room. Don't be afraid to call the office. I'm always here. I know I move quickly on these videos, but I'd be more than happy to slow things down and make sure you have all the pieces put together so you're ready for kicking butt with us as a new student in our trade room. Don't be afraid to call the office. We have live chat on the right-hand side there, and you can always drop questions in the comment section below. Guys, that is it for me tonight. Have a wonderful rest of your evening. As always, be well, be nice to each other, and you better be here next time, right? Adios, amigos. Bye-bye for now.